Hey guys, welcome back to my channel. In today's video, we're going to be backtesting Euro USD 2023 January, I believe. A lot of people have messaged me asking me to backtest and show how my strategy is actually applied to the market. So this video is for those people. And if you're somebody that's interested in trading this strategy, what I'd recommend you do is backtest the month I'm about to show you guys, and also go a month ahead of me. I'm going to be backtesting all of 2023 on Euro USD from January all the way to December. So go a month ahead of me and backtest that as well. Make notes, and then when I drop my video talking about that month or backtesting that month, you guys can compare our notes and see where you could improve, or if I missed something, you can put it down in my comments and then let me know what I missed that you spotted. But yeah, without wasting anyone's time, let's get into the video. Okay guys, so to start off, if you haven't seen my strategy before, I'm going to put just above a link to this video explaining my strategy and what it is. It's basically just Orderblocks, but if you come into this video confused and you're looking for what I'm talking about, that's just it up the top. So to start off, I just want you guys to know when I'm talking or doing my top-down analysis, these are the 4 things that I base my top-down analysis from. And for those who don't know what top-down analysis is, it's just when you start from a higher time frame and you work your way down to the time frame you actually execute on. These are all the individual concepts I've added to my strategy to make it what it is. So if you're ever lost, you can go watch videos on these individual concepts and then come back and watch the backtesting video. Okay guys, so this is the beginning of, I think I started the backtesting session on the 3rd of January, so it's Tuesday. So how I always start my backtesting sessions, or every single day of the backtesting, is I start from the daily time frame, and I use the daily bias video to at least give me a good gauge of where we're going in that day. So if you go watch the videos on daily bias, this will make a lot of sense for you. But for the people who want me to make a video, I will make videos on these individual concepts, showing you how I use them and personally apply them. But to start off, let's just say for this day, ideally, there's no bias on this day because price failed to close below the low of this candle, Friday the 30th of December, or close above. So there was really no bias coming into this day. So when there's no bias on the daily, I recommend dropping down to the 4 hours and seeing if you can find a better bias. So on the 4 hours, you can see this is horrible price action right here, guys. You don't want to be trading in price action like this. This is not the most ideal price action. Now we are seeing a bit of movement. Price came up, swept, and now we're breaking down. But in this times, you don't want to really trade. That's why the symbol is usually not traded by most traders. But yeah, so what I can see on the H4 is we have broken this 4-hour swing low just down here. So that is a chalk, change of character. And I like the way price closed strongly below this low. So if I was to look for anything, I would think it sells. But because of the market conditions, I may not trade just yet. But I would be looking for sales. So that's really just it for the 4-hour. Also, I do have these 2 indicators. Sessions just shows you like the sessions, like London session, New York session, all of that. That's just on my charts constantly, so I don't have to worry about the times I'm trading. And then this is just a fair value gap indicator because I can't be bothered to draw my fair value gaps, and I don't need to because I can see them if I needed to, but this just does it for me. And for the people who wonder about my strategies, I only trade London session and I trade Monday to Thursday. I don't trade Fridays. Fridays do work with this strategy, but it's just less probable for me, so I just tend to stay away from them. Now, onto the actual day. On the 4-hour, I see a nice strong close. Well, I'm not sure if this candle was closed yet, but a nice strong break below this 4-hour low here. And I just dropped down to 1 hour. Yeah, see, on the 1 hour, we saw a nice close, full body candle close. And I determine a change of character or a break of structure by candle body close. So I'd like to see a strong body close above or below to really consider a change in character or a break of structure. But now I've seen this, what I could be looking for is for price to come into either a fair value gap on a higher time frame. So this fair value gap. This is also a fair value gap, as you can see, but it's not valid because this hourly candle has not closed yet currently. It is still printing, but this is just what it looks like right now. So I can't consider this a valid fair value gap as this candle hasn't closed yet. So that's really just it for my higher time frame working down to. I don't do a lot of analysis working my way down unless there's a reason for there to be a lot of analysis. I don't really do a lot. Then I drop down to my time frame, which is the 15-minute and the 5-minute. I only trade those 2 time frames because I found out they work the best for me. And on the 15-minute time frame, same thing. This fair value gap just doesn't exist because it hasn't been printed yet. I do see this fair value gap down here. The price has tapped into and respected, but I am still bearish or expecting bearish price action. So my session starts at 8 o'clock London time. So I trade from 8 to 1 p.m. I give the market between 8 and 1 p.m. to form my setup, but I give the setup until 4 p.m. to pull back. So if your trade sets up, let's just say at 1 p.m. for example, assuming there's not news, obviously, I'll give it until 4 o'clock to pull back. So on the 15-minute, nothing's really going on. My session just started. Oh, as you can see, price just dumped. Continue dumping. So when price just dumps or moves in a direction, don't just accept it for it is, oh yeah, price moved in that direction. Where are we going? You need to understand where we are going. So now that you're looking at this, price has swept all these lows and we're no longer in the sideways consolidation conditions, but that's a tongue twister. But yeah, we've broken below it. So you do ideally want to see a H4, a nice strong close below all these areas if you want to continue to the downside. But yeah, this 4 hour candle hasn't closed, so I'm just going to give it until the close, which is at 10 o'clock, I believe, UK time. So I do like the ideas of sells, but the market isn't really giving me a chance to enter. So these are two fair value gaps I'd like to see price push into on the M15 and then form my setup. So we wait and see. Does anything happen on the 4 hour? Ooh, we're pushing for these lows here. Once you move past a couple of highs and lows, just get rid of them. You don't need them there. So just gonna rename this line liquidity. So we're looking for price to either come into this area, sweep these lows, and then maybe push up, or these areas down here and sweep those lows. So those are my two things I have my eyes on. But I want you guys to remember, you're not predicting the future. You don't need to predict where price is going to go. You just need to understand that when it gets to these areas, you're expecting to see a reaction, and just wait for your reaction. You don't need to enter the market there and then once it touches that area. So yeah, again, I'm just going to drop down to my time frame, see if I can either get a reversal of this sweep of that 4 hour liquidity or get a continuation down to the other 4 hour liquidity I was talking about. I'm going to mark it up so you guys just know what I'm talking about. This low down here, this is a low and this is a low also. So this low down here. These are my two areas of interest. If I want to take sales, I want to take sales down to here. If I want to take buys, I want to see price sweep this liquidity and give me a choke to the upside. So let's see what's going to happen. Okay, we do get a mini choke here on the M5, I believe. So this is what, 4 hour. Yeah. I would like to see it swept on the 1 hour at least before I can find my entry. Let me see. On the 1 hour, the week close below. That's a very, very small close, but I do like the idea of us going up or bullish temporarily to push into these fair value gaps. So on the M15, this doesn't look like my normal entry, but I can tell you on the M5 it's going to be my entry because I've just done this so many times. So on the M5, if you look, go back to my previous videos and you'll see this is the exact same thing I drew up. We have our fair value gap here. I'm going to mark it up. FVG. We have our liquidity sweep here. It's a M5 internal liquidity sweep, but so honestly, to me, as a liquidity sweep is a liquidity sweep. Whether it's an internal or external, as long as you see a liquidity sweep, it is valid. So we have our LQ sweep right here. That's one of my confluences. We have a break of structure here. This is our break or chalk, whichever whatever you want to call it. As long as you understand what I'm talking about, that's what that matters. So liquidity sweep, chalk, a fair value gap in the move that formed the chalk. So as you can see, this whole thing is the move. So you just want to see a fair value gap form in this whole move up. It could be down here, it could be up here. As long as it forms, it's valid. This one formed, but it was mitigated on the way back down, and that doesn't matter. It's still valid. It's still valid to me because it hasn't touched my entry point. So that's 3. The last 2 is no fair value gap near your stop loss. As far as I can see, there's no fair value gap where my stop loss is. That's 4. And the last one is that this order block has to be unmitigated. Technically speaking, all these consecutive candles coming down are the order blocks, but I like to enter on the last candle. So the one that's the lowest or the one that's the highest if I'm taking a sell. So this would be the candle I'm interested in. This candle here. Sorry. There's too many lines. I'm going to delete this line, but just know this is the line of the H4 liquidity sweep. So yeah, I see liquidity sweep, break of structure, fair value gap, no fair value gap where your stop loss is, and unmitigated. So this right here is where I'd enter from. Just draw up a box, mark up my order block. Now, the way I use order blocks is very unique. I do use fib levels to determine where I want to enter on the order block. So for Euro USD, I measure out the candle from top to bottom or bottom to top. And as you can see, it's 5.3 pips. If a candle, I want you guys to write this down. I'm not sure if I put this in my other video. If a candle is between 0 and 5 pips, you want to enter on the edge of the candle. So the one closest to price. So on this candle here, it will be the top, just all the way up here where the wick is. If it's between 5 and 8 pips, I want you guys to enter on a 0.25. And if it's larger than 8 pips, I want you guys to enter on a 0.5. Now, I'm going to show you how I do everything, so don't worry. I use a Gantt box. So it's this right here, Gantt box. You can find it by coming up here, then going to Gantt box. I just draw out the size of the box. And as you can see, I already have these levels drawn in. I know what these levels are, but I'm going to show you my settings, just so you guys understand. This is how it looks. This is what the settings look like. The 0.25, the 0.5, the 0.75, this is not really relevant. These are just so it looks good. But yeah, this is literally what it is. So this candle, when we measured it out, was how big? 5.3. Now, if it's just bigger than 5, you can still enter on the top of the candle, but just for the sake of, showing you guys, I am going to enter on a 0.25 or just above. Especially if you're live trading, you always want to enter just above or just below your entry, so you actually get tagged in because of spread. Stop loss, we always cover the most recent low or the low of the order block, which will just be this low down here. So that's literally it. So this is the valid setup. So I'm just waiting for price to pull back in. Now, where we place our take profit, that really determines on what price is looking like. Minimum, we always aim for 1 to 3. That's the lowest I can accept with this trade. I can accept 1 to 2s as well, but I just prefer 1 to 3s minimum because I know that 1 win covers 3 of my losses. So just aiming for 1 to 3, this is what price would look like. However, to know where to aim your TP, if you're especially on the M5, go on higher time frames. So go on the H1. On the H1, looking at price right now where our TP is, it is floating in the middle of nowhere. The next valid POY will be this fair value gap right here. So if you wanted to extend your take profit all the way to this fair value gap, that's a very valid decision. You could go on the H4. On the H4, is there anything? Okay, there's also a fair value gap there. So maybe this is your highest probability area of your TP being hit. Anything more than that, you can't really guarantee. I don't do partials. I don't do break evens. No, nothing. I just let the trade win or lose. So I tried breaking even and it really messed up my P&L. So I've learned that just leaving it open risk, the whole trade is completely fine. Obviously, if there's news, you do have to manage your position. Maybe that's the only time it's acceptable to break even, if there's news around the corner. But if there's no news or nothing, just leave it. So yeah, that's really all I'm looking for. So now I'm just going to set the entry. I don't know if this wins or loses. I'm going to put it at the 1 to 4, but if you wanted to take out the 1 to 3, that's also fine. And yeah, let me just place order and we'll see. But on my personal account, I do risk 2% because my strategy does allow me to increase my risk because it's quite a high win rate. But for the sake of this example, I'm just going to risk 1%. And I would recommend risking 1%, especially starting out, or maybe even less while you're learning the strategy. So yeah, we're going to play it forward and see what happens. Ooh. As you can see, unfortunately, price just about missed me. It just about missed me. So if you had decided to enter on the top of the candle, that would have been fine. You would have probably been tagged in. But for the sake of this example, just showing you guys, I just wasn't tagged in because my entry was just a bit too low. But you can always enter on the edge of the candle. But if you're on high risk rewards, that's when you can bring in the fib levels. But yeah, so obviously it sucks to see, but as you can see, it did work out. So I'm just going to delete this entry. And yeah, price worked out. So I'm just going to not journal that as a trade that I won. I'm just going to journal it as a missed trade. And no matter what strategy you trade or how you trade, you're always going to have missed trades. Like, you can't escape them. So just see me miss the trade, you're thinking, if you're thinking, this strategy doesn't work, blah, blah, blah. It's always going to happen no matter where you go. There's no perfect strategy. Now, what I could have done to improve, and this is me being conscious of, my trading, is I could have just entered on the top of the candle instead of looking for a sniper entry so to speak. So that was one place I could have improved on. But as you can see, the analysis was good. So what time is it? As you can see, the setup did form at 12:05, which was still in my window. I don't know why my session doesn't cover it, and it pulled back at 1. So this was a completely valid trade if you wanted to take it. And you could have maybe aimed further, but the 1 to 3 is what I care about. But yeah, I think that's really me done for the day. I don't think I'll be able to find another entry unless this is an M15 flip zone. It is. Okay, so the only potential area we can enter off of again is here. This M15 flip zone. This is a 10 pip flip zone. So same thing, fib levels. And I'll show you why this is valid in a second. So let me delete the fib zone so it's a lot easier to see. So we drop down to the M5. If you go back and watch my video on the flip zones, you understand why I dropped down to the M5. So when it's a flip zone, I'm just going to quickly explain. When it's a flip zone, all the other confluences I look for are always valid on the M15 or the time frame you're entering on, except for the liquidity sweep sometimes. Sometimes you can't tell if a flip zone is valid or not unless you drop down a time frame lower. So as you can see, price did sweep liquidity on the M5, so it is a valid M15 flip zone. So I only go down to the M5 just to confirm there was a liquidity sweep. Then I go into the M15. Okay, so now I have my liquidity sweep from the M5. I have a break of structure. This is the break of structure this high. So we have a break of structure, that's 2. We have a fair value gap in the move that broke structure, that's 3. We have no fair value gap now, stop loss, that's 4. And the flip zone is unmitigated, which means price has not pushed into it and then pushed off and then come back. So it's just unmitigated, which means price hasn't gone there. So which means this is a valid trade. So yet again, we drew up the thing. I think it was like 10 pips. So we draw up fib levels, enter 0.5. That's it. Stops just below the low, aiming for 1, 2, 3, which was, yeah, okay. Now, you may run into issues with a trade like this. This is what I'll consider a lower probability trade because price has already pushed into the fair value gap we were expecting it to go to. So now if price respects this fair value gap and starts coming down towards our entry, you might run into issues. However, if you're very, very convicted that this trade is going to turn around and go bullish, at least in the long term, maybe past this fair value gap all the way up, then you can still enter your trade. I am convinced, I do believe we could break past this fair value gap, so I am still going to leave this entry, and just for the sake of this video, I am going to leave the entry. But yeah, so it is valid. I'm just going to place the entry, that's all. Place order. Okay. Okay, price hit my take profit before coming to my entry, which means this trade is no longer valid. I am going to delete the entry. That's 2 trades missed, and I think that's pretty much me done for this day. So that's really it. Go to the next day. So next day again, start, remove everything, go back to the daily. On the daily, what are we looking for? Using the daily bias, I can already tell we're bearish, continuing. But to confirm your daily bias, you always need the H4. So this is previous day's low we're looking at. So that's where I'm expecting price to go to. If you're expecting price to finish the day lower, what you're going to see is that price is going to do something like this. Price is going to shoot up at the beginning of the day and then finish the day lower. So ideally, you want to enter your trade or find your setup just as this down move is starting to begin. But yeah, I'm not going to waste too much time on this day. Okay, so on the H4, we are bearish on the daily overall. Well, on the H4, we are pushing up. So I'm thinking maybe we could see a sweep of this high before we come lower, or we can see price come in respect of 0.5 of this fair value gap, the equilibrium, and then head lower. So these are my 2 areas I'm looking for price to go to before we drop. So down to the H1, nothing really much there. Still the same thing. Then just N15. Just go to your time frame you actually trade on and just play out. Okay, so like I said, price disrespected this. So that's why it's good to have more than one point of interest or area in mind, because you don't know where it's going to happen. You just know it's going to happen. Well, you don't know, but you just have a good idea that it's going to happen. What news is this? Oh, sorry guys, I don't trade FOMC day. All the analysis was good, but FOMC just doesn't play out. So I'm just going to skip forward on this day because FOMC just doesn't respect anybody. FOMC doesn't care who you are. It's not going to respect your analysis. In terms of other news, NFP and all the other news, I do trade on those days, but I don't have large TPs because I know that news can come and mess me up. So yeah, but let's see. yeah, so FOMC would have just killed the day. That's really it. On to the next day. Okay, on this day we do have no bias because price failed to close below this low of this day and price failed to close above this previous day's candle, which means this day has no bias. So on the daily, we don't really do much on the daily. There's no bias. We can observe that there is a daily fair value gap here, but in terms of deep analysis, that's really just it. On the 4 hour, anything else? Okay. On days like this, it could be a bit confusing because you have no bias to guide your day. But I'm just going to play it forward and let's see. That was the daily fair value gap up here, H4. On the H4, it's not really giving us a lot of information. Just looking at this, we can be expecting ERL, IRL maybe, because price did close above the 0.5 of this equilibrium. Once price closes above or below the 0.5 of that fair value gap, the chances of price disrespecting a full fair value gap is very high. So that's just another tip for you guys. So using ERL, IRL, you could be expecting price to do something like this. Shoot into this fair value gap and then go and sweep these highs, the H4 highs. So if I am bullish or looking bullish, I'd like to see maybe a little move down before I see a push up. There is also news on this day, so we have to be careful. But that's really just it. And you see me price swept at the beginning of London and is now pushing up. It did leave behind this order block as it was pushing up. So this is technically a valid setup just here. So if you don't want to, we have a liquidity sweep. We swept these liquidities, this low and this low. That's a liquidity sweep. We had the break of structure, so we broke these highs. If you're someone who wants extra confirmation on your trade, you could use either this high that I'm marking up now or this high here. We got a break of both of those. I'm just going to mark up the high I care about. So we had the break, we had the liquidity sweep, LQ sweep, break of structure, liquidity sweep, fair value gap and then move that break structure. That's 3. Unmitigated, price hasn't pushed into this order block fully. That is 4. And is there a fair value gap near our stop loss? No, there is not. Or where our stop loss would be? No, there's not. So that's all 5, which means this is a valid setup to take. Now, yet again, I am going to draw my fib levels. I'm going to delete all of this. I'm just showing you guys what it needs. Okay, so this is 12 pips. So we draw our fib levels. We enter on the 0.5. And this is what I meant by it's unmitigated. I do see that price did shoot into this order block a little bit, but it didn't shoot into where I'd expect it to go to. So I still count that as unmitigated. Now, this would be a larger trade or a trade with a bigger stop loss. Doesn't mean it's not going to go where you think it's going to go. It's just going to mean it's going to take longer. Now, what you could do is refine this trade to the M5 if there's a possibility of doing so. Like, see, this could be a refinement. So instead of entering on the M15, you could drop down to the M5, find a cleaner entry. The chances of price actually touching this entry is a lot lower, but your risk reward will be better. So you could take something like this, aiming for these highs maybe, or just past this fair value gap because we were expecting it to be disrespected. So this is the M5 version. Let me just hide this real quick. This is how the M5 would look if you wanted to take off the M5. Go through my videos, everything you're looking for is here. Then we got the liquidity sweep, the break of structure. We have the fair value gap and then move that break structure, unmitigated, and then I think that's all 5. I don't really know, but yeah, so this would be valid for. I am going to take it from the M15 because that's what I originally marked it up on. But if you want to take on the M5, that is also fine. Just understand that the chances of price missing your entry is going to be a lot more. There is news, so you can be in for a bit of manipulation, so just be careful. Let me see where my TP is actually. I just placed it randomly. Okay, let's just put it here at 1 to 3 at the end of this fair value gap. And then, yeah, we'll play it out and let's see what happens. I'm going to trade through news. Yeah, so that's it. Let's go. And let's see what happens. Okay, so price tagged us in. Now, you do see there is news coming up in 2 candles. What you could do is, if you're very, very scared, you could just close out your trade if you don't want to be manipulated by news. But what you could also do is just move to break even and secure your trade. Worst case was if price pulls back and hits it, then it's a break even, you lose nothing on the day. But what I'm gonna do is I'm gonna leave this through news. If I win a trade, I win a trade. If I lose, I lose. Like, I'm just gonna let this play through just for the sake of this backtesting. But in real life, I would have probably just closed this trade. Sorry guys, I had to switch because my light kept dying. So yeah, but I would maybe close. But yeah, let's just play it forward and see how it goes, just for the sake of this video. So news came in and we did get stopped out, unfortunately, because of news. That's why it's always good to close before or move to break even, just so you don't get manipulated by news. But yeah, if you were to journal this, you'll journal this as a loss or a break even or whatever you decide to do at that point in time. But I'm going to journal this as a loss. Okay, so that's the end of the trading day for me, which we ended up on 1 missed trade and 1 break even, which is the reality of trading in itself. Don't think I'm going to come on here showing you winners every single week. That's not what I'm here for. I'm here to show you the reality of trading in these live markets. So I had a missed trade and I had a losing trade. Those are the 2 trades I have, and which would have meant I ended this week a losing week or a break-even week if I decided to close my trade before that news event. So yeah, that's really it for this video, guys. In my next video, I'm going to go through the next week and then the week after that and then the week after that. And we're just going to keep going until there's so many videos on this strategy that you have no questions to ask and you really, really understand what it is you're supposed to do with this strategy. But yeah, that's really it for this video, guys.